There's never been an investment vertical for Silicon Valley that's got the return profile better suited. I think the acronym for that is SHTTE, which I believe is shitty. So short time to equity, or short time to exit, sorry. So shitty VCs love that short time to exit. And when these things are just outside the reach of regulators at present, just like online gambling was in the aughts, they can get away with it for now. And basically what it lets you do is you create your own security. You can pump the heck out of it, not following any of the rules that actual securities industry participants have to follow. Like there are all kinds of rules about what you can and can't say about stocks and bonds and all kinds of different offerings, right? And there's no one to hold them to account. And as long as they can pump the thing enough to get out of their initial position plus some, it's completely riskless for these guys because they're selling it for like 20x on the first sort of public sale versus what they invest in.
Hey everyone, thanks for watching this episode. If you enjoyed this episode, make sure you like and comment below. And to find future episodes in your feed and push notifications, make sure you subscribe. And if you click the little bell, you'll get every new episode as it's released. Thanks again for watching. Today, I'm sitting down with Cory Klippsten, the founder and CEO of Swan Bitcoin and GiveBitcoin.io. Cory also serves as an advisor to Unchained Capital and Riot Blockchain, and he is a partner at Bitcoiner Ventures. As an advisor, he has supported more than $250 million in funding since 2016. And as an angel, he has invested in more than 20 VC-backed tech companies. Today, we will learn about Cory's early years, what he did before founding Swan Bitcoin, his Bitcoin origin story, the origin story of Swan Bitcoin, his thoughts on the Federal Reserve and how it may or may not impact Bitcoin, and Plan B's stock-to-flow model, and a few other things. So with that said, let's dive in with the one and only Cory Klippsten. Hey guys, I'm going to take a quick pause to introduce the first sponsor on the Jay Gould Show. I am happy and proud to say that this show is now sponsored by Withum Smith & Brown, which is a forward-thinking, technology-driven advisory and accounting firm that is committed to helping big and small companies be more profitable, efficient, and productive in today's complex business environment. Withum now also has a dedicated crypto and blockchain technology team to help early-stage businesses properly navigate all the crypto tax-related matters. I've been using Withum both personally and professionally for nearly a decade for all of my business's personal needs as well. I'm very happy with them and I highly recommend Withum. You can contact Withum by visiting their website at withum.com. Now back to the show. Cory, welcome to the show.
Thanks, Jay. Good to be here, man.
First question I ask everybody who comes on the show, tell me the 5 people that you surround yourself with professionally these days, because they say you are the average of the 5 people you surround yourself with. So give us the 5 people you're hanging out with, talking to on a daily basis for the last few months.
Oh man. I mean, it's going to be all members of the Swan Squad probably, because that's who I see and talk to every day. So Jan Pritzker, Brady Swenson, probably Steven Lubka, who runs the Swan private sales team, Jajan Balahadl on Twitter for him. Probably trying to think who else I actually like. It's a big team now. It's like 35 people. So who I actually talk to a lot. Probably talk to Tomer Strolight a lot because he's our editor in chief and I'm kind of a content guy and that's such a big part of our brand. So, and you end up talking to him a lot. And then I'd say probably, at least you're talking about like the last 3 or 4 months, yeah. I'd say probably Kristen Thompson, Speak Serve Grow on Twitter, because she's kind of running like PR and events. They're all Bitcoiners and they're all on my team because that's just what I'm immersed in right now. I could give you a different list of people outside Swan, but yeah, that's pretty much who I'm chilling with these days is the Swans.
Let's go back to your early years. Tell me where you grew up, socioeconomic conditions, what were your parents, what did they do for a living, siblings, schools that you went to. Let's kind of walk through Cory as a kid.
Yeah. So I like to joke that I immigrated to the United States at about 8.5. But the reason I say that is because my parents met on Haight-Ashbury in the 70s, and I was born into basically like a commune, spiritual seeking kind of situation up there in San Francisco and Northern Cali. And it wasn't until we moved to Seattle and finally started public school for 5th grade when I was like 9 that I was like, oh, okay, this is not what I grew up with at all. This is interesting. So yeah, I think that was interesting because I got an outsider's view on how this place works. It made me really observant, made me really kind of open to people from different backgrounds, and kind of always been a lifelong student of social behavior and motivations of different people, because I kind of had to learn real quick when I got thrown in the mix, jumping into public school after that sort of different beginning. Years later, after spending 15 years in Chicago and New York, it was funny because I kind of didn't talk about that origin story or that background the whole time I was out east. And then you get back to California, and like, if your parents weren't hippie, Hindu yoga meditation of some kind when you were growing up, like, you're the weird one. So it's just kind of like normal. You talk about it all the time. But yeah, I would say I grew up in Seattle. That's the family seat. I'm a, Sonic, Seahawks, Mariners fan. Finished high school up there. Was really into journalism and thought I wanted to do TV reporting and anchoring, whether that was going to be like news on CNN or, sports on ESPN or something. That's really what I wanted to do. I went off to a good broadcast school for undergrad at University of Missouri, and actually reported on the local NBC station while I was in school, which was great because I got it out of my system, found out I actually didn't like it. And, this was late 90s. So the internet was blowing up all around me. And I just was doing a lot of stuff online. I'd been online since 93, and I was building websites, and I built the station's website and kind of used that to backdoor my way into tech. I got an internship with Microsoft in 98, and then went to work for them on an early interactive television product starting in 99. And that's how I got out to the East Coast back then. So I worked for a lot of big companies in my career, and it was never kind of the right fit. I never really liked it. I was always kind of looking for 6 different side hustles and always getting involved in other things. But I worked for Microsoft. I worked for Morgan Stanley. I worked for McKinsey & Company after business school. And then later, as a way to get into tech and get out of sort of, consulting and private equity, which I've been doing, I went to Google for a couple of years, and I left Google in summer of 2013. And I had started investing and advising a little bit before leaving Google in the early stage startup scene. But after leaving Google, and I was now in LA, since then, the last 8.5 years, it's just been full-time early stage tech for me. Probably invested in 40 or 50 companies, advised another 20 or 30. There's some overlap where I did both, and looking for places to operate. And obviously that led me to what I'm doing now.
And I think you reminded me, I didn't realize when you were at Google, you remembered my company. You said, I think I know you from the Google days. We had a thing way back before it was Yashi. It was called Gamers Media. And I think you might've remembered my company. You said at one point, one of the Clubhouse rooms, you remember brought them up.
I remember hearing about Yashi, but I think where we really got connected, and I heard your name a lot, was I met Lou Kerner, our mutual friend, in 2013, really soon after leaving Google. And we've been friends and mixing it up with startups, especially like media/ad tech inflected stuff since then. And he was always telling me about his buddy Jay. And I don't know, it was probably one of those things where we may have gotten invited to the same thing, but never met up. But I was aware of you back then. Just didn't meet you until Bitcoin.
Tell me your origin story to Bitcoin before we get into Swan Bitcoin. So tell me how you first got introduced to Bitcoin. I've heard this on other podcasts, but I wanted to hear from you first person. Your first introduction to Bitcoin, what you thought of it when you originally heard about it, when you started to fall down the rabbit hole. Kind of walk me through all that.
Yeah, well, I swung and missed once. I swung and missed twice, and then they hung a slider on the third one, and it was so meaty. I finally caught it. But yeah, somebody gave me Bitcoin at a like tech media conference. I remember January 29th of 2014. It was like an eighth of a Bitcoin. It's like $50 at the time. And it was on a blockchain wallet, and I, had it on my phone, and I was just super busy. I was in the middle of like raising around for an ad tech company, and it didn't take. I didn't look it up. I actually had Bitcoin in my email from like 2012, but didn't pay attention at all. I searched for it at one point. So yeah, that was a swing and a miss. Lost the private key, lost the wallet, lost the phone, whatever. And then almost 2 years later, Christmas of 2015, a friend of mine, was like a longtime advisor to companies coming out of Stanford and Andreessen and stuff like that. And he had 8 companies he'd rolled into a Series LLC, and he asked me to put together like a deck and a sales plan for selling off like half of the Series LLC, like mashing it all together into a portfolio. And one of the companies was Ripple, which wasn't going to help you understand Bitcoin. And the other one was like Balaji's like toaster mining thing, and mining with appliances, whatever, 21E6, that crap that ended up selling to Coinbase. That didn't really help me understand Bitcoin either. So that was my second swing and a miss, trying to figure out that. And then the hanging slider was just all the noise in the price run up of early 2017 was just really hard to miss. I was hearing about it everywhere. I was in the Silicon Valley ecosystem like very heavily. So obviously it was very sort of crypto inflected. And, the first person that made me take a look at Bitcoin had just left a Plum VC position to, run BD for Mesh Labs, which became Orchid, I think, something like that. Luckily, as I started to network into it, one of the big crypto fund managers, who's actually based in LA with a few billion under management, insisted that I read Digital Gold and buy some Bitcoin first, even though he was off doing Chinese ICOs all day and stuff like that. He was like, just start with Bitcoin, trust me. So that always stuck with me. So thank you, Tucker. So I did start with Bitcoin, but then you're looking to the same people that you look to for advice on SaaS and market networks and video companies and all this other stuff, which is like, I was a devoted reader of, AVC, Fred Wilson's blog, and Andreessen Horowitz and all this stuff. And, there was just so much going on in this crypto stuff. So it took me about 11 months to do the shitcoin horseshoe, where you start with Bitcoin and you explore all the shit coins and like you have this realization that, oh my God, these guys are just full of shit. And you're just going to focus on the thing that actually matters. So that for me was, like March or April of 2018. I kind of saw the light that, Bitcoin was the thing to focus on. And you could probably mix it up with insider games and, play Ponzi-nomic stuff and pump and up or whatever. But, I'm the guy that, left Vitamin Water as, I was in top 50 employees there as a summer internship in business school. And I decided not to go back because all the execs drink Diet Coke because Vitamin Water has too much sugar. Like if I don't believe in the product, like I just can't sell the thing. I can bullshit about it for a minute, but I can't get involved in something I don't actually believe in. So, so I basically spent about 4 months extricating myself from my crypto activities because I'd hired like 12 people for a 9-figure crypto fund, and I was the president and chief investment officer. So I got out of that by like August, and I think I was in Turkey for the whole month of August, just like sleeping and reevaluating.
This is 2018, right?
This is 2018,
18, okay,
2018. And then, and basically hit the ground back in Los Angeles in September, trying to figure out what to do in Bitcoin or if I could do something in Bitcoin. So I was just still helping out some old, SaaS companies and stuff like that and doing the advising consulting dance and really looking hard at what I could do in Bitcoin. And I actually had a bit of a payments background. So that was the easiest thing I thought would be to get involved. And so I started sniffing around the payments companies and thinking about, what can we do with, medium of exchange here? And my exploration at the time anyway, led me to just believe that it was just way too early for venture scale revenue and like massive returns in medium of exchange, because you've got to kind of establish an asset as a store of value before it becomes a widely used medium of exchange. And so that led me to think, I've got to do something about just getting people to buy and hold lots more Bitcoin. And that's what I should do. I spent about 3 or 4 months working with Stephen McClurg, who's now the founder of Valkyrie, on the initial idea with him. This was soon after he split from Arca, and he was a former Guggenheim PM, on doing like a closed-end fund that would have Bitcoin and like some levered treasuries, but like 80% Bitcoin was kind of the cap you could have to get that on Pink Sheets. But as we got closer to getting it approved, he ended up selling it to Galaxy briefly before separating from Galaxy and doing Valkyrie. As we got closer, I realized if I do this, the only thing that I can do after the thing is approved is sell the damn thing, which means I would be selling to agents. I'd be selling to portfolio managers who manage money for other people. And then you don't get to have the fun Bitcoin conversation that changes somebody's life. You're talking about trying to get somebody off zero, with like BS narratives around, stock to flow or some bullshit that's trotted out this week or something. And, or it's an inflation hedge, this month, but not usually or whatever. Like, I don't like that, I've seen it so closely for so long from so many friends in finance, having gone to University of Chicago, and like half the class goes into banking and they're all out in New York doing their thing or whatever. But like, you read Barron's and some research reports on Sunday, and you just like come up with 3 or 4 trial balloons that you're going to call your clients with on Monday. But all you're looking for is a story. if you want an example of like
Yep.
what it looks like when somebody's just looking for something that can travel, like Raoul Pal is like perfect example. Like he doesn't actually care at all about the veracity of what he's saying. He just cares about like whether it's something that he can sell, because that's what he comes from. So it's the difference between somebody who actually has skin in the game versus someone who's just trying to sell a story and looking for the transaction,
Yeah.
right? So bankers are looking for the transaction. It's different from the investor that actually wants to find out what's true. So that was unattractive to me. And I realized I wanted to really focus on, dealing with the principal, the person whose money is actually get invested. And I wanted to sell Bitcoin to that person. And the worry that I had was, this thing, at some point there will be millions of people selling this thing and thousands of companies selling this thing in all these different ways. And so what can you bring to the table that will let you build a big enough brand that your margins will be sustainable for the long term? And it seemed to me from my own experience that, education was the key, and that there needed to be like really, really loud, noisy voices promoting Bitcoin education and Bitcoin first and Bitcoin only to save people from, 4 or 5 year shitcoin horseshoes, or at least make them much shorter. Right. And, it was clear that there were some authors that were out, and there were a couple of podcasts, because 2018 was the Bitcoin standard and the start of both TFTC, Tales from the Crypt, and Stefan Livera's podcast, both started in 2018. So there was starting to be some really high quality stuff out there, but it was really in its infancy, and there wasn't a company that was set up that was like really specifically focused on that. So I just thought, if you bundled, the focus of the company would be like building great products for Bitcoiners and around Bitcoin with a heavy focus on education. I thought that could be our marketing, and that we would get a lot of organic reach, and it would make customer acquisition really cheap.
So you mentioned a VC.com. That's actually the first time I read that I can recall. First time I read about it was on Fred's blog back in the day. We both know a bunch of these VCs in the Valley. You've been in the space as well. It blows my mind that they're doing what they do, actually. Like, they're smart guys. I mean, they're very, very smart people. Why are our very smart Valley friends so confused? Why are they so wrong on this?
No, I don't think they're necessarily confused. I think they're just
Giving them the benefit of the doubt that they're not acting without integrity. Why are they doing that?
I think there's a bit of both. I mean, I think it's really, really hard to see through this thing. It really is, because the returns are just, there's never been an investment vertical for Silicon Valley that's got the return profile better suited to their economics. It's so good. It's called short time to liquidity, or short time to equity.
Yeah.
I think the acronym for that is SHTTE, which I believe is shitty. So short time to equity, or short time to exit. Sorry, short time to equity, short time to exit. So shitty VCs love that short time to exit, where they can, and when these things are just outside the reach of regulators at present, just like online gambling was in the aughts, they can get away with it for now. And basically what it lets you do is you create your own security. You can pump the heck out of it, not following any of the rules that actual securities industry participants have to follow. Like, there are all kinds of rules about what you can and can't say about stocks and bonds and all kinds of different offerings, right? But they can say whatever they want for now. And they can pump this thing up like crazy and use these crazy Telegram groups and Twitter promotions and like whatever else they want. Plus they can go nuts talking about the future of, Web3 or whatever these things are supposed to do. Or, they can take all their favorite articles about blockchain from 2017 and do a find and replace and put NFTs in there instead of blockchain and say it's going to do that, which is basically what's going on for the most part. And there's no one to hold them to account. And as long as they can pump the thing enough to get out of their, initial position plus some, and then a few of them actually like catch fire with retail and have like a longer story, it's just riskless. It's completely riskless for these guys, because they're selling it, for like 20x on the first, sort of public sale versus what they invest in. So the VCs that I was around a lot in that first year in crypto, 17, 18, they all refer to it as we can make our own weather. And there's groups of them with, there'll be like 15 or 20, just like people are, at the individual level with NFTs, they're stepping up each other's values and creating like a price history for these things. So that they look, and then finally the chair stop, or the music stops, and they've dumped it on, somebody who's not on the inside and doesn't realize that all those sales were actually a fake little cabal.
Mm-hmm.
It's like that with all these crypto projects too. Like these VC firms actually coordinate with each other and they step up each other's values. So like somebody will do the little seed round and then they'll convince somebody else to do the A round because they're going to flip around on the next project and do the horse trading.
Venture capital in general is, yeah. I mean, this is what they've been doing.
It's not. It very much is when it comes to crypto.
It kind of is and when you think about like what they've been doing in this series, the seed round to the A to the B's and the C's, they just keep stepping up mark to market and they keep raising larger funds for their 2 and 20s. I mean, they have to have exits at some point or it doesn't make any sense. But the companies that they brought public previously are just buying them up for them. So
yeah, there are a lot of similar dynamics.
And they're board
play,
members
right?
in those companies, right?
Yeah. I mean, some of the bigger firms ceased being venture firms for the most part a long, long time ago and are basically investment banks on the West Coast. I mean, the whole talent pool is basically people that, were in banking before or would have gone into banking before. And they, basically traded the blazer for a Patagonia vest. Like it's the same guy though, right? It's somebody from St. Grottle Sachs named Chad, whatever. Not our Chad, their Chad.
Not this Chad.
Not this Chad, the other Chads. But I mean, I think like, I remember having my eyes open to this and like, it was probably like 2014 and it was, I mean, I may have this wrong or it may be apocryphal or whatever, but at the end of the day, it's basically probably true. And if it wasn't this deal, a lot of them get done like this, but it's like a major firm will set the price of a round at like a nice high fat number. But then they'll turn around and they will package a bunch of SPVs and go sell the deal, which they can do because now they're a principal, not an agent. So you don't have to be registered or whatever. And so they go and sell the SPVs. They're taking 20% of the SPVs plus a management fee. They get out of their cost basis, basically. So it's like risk-free by putting their label on it. And it's total free call option. And they did this on all those names back then, right? This was the Pinterests and the Airbnbs and all this stuff. Like that's basically what happens.
They're doing it now. And I'm friends with Peter Pham and Mike Jones, and I'm an LP, but they've recently, by way of being an LP in their fund at Science, I had exposure to Liquid Death. And I was like, I want to get some exposure directly. And so then they passed it to me and the others, and it was an SPV. And I'm like, they were taking 0% management fee and 10% carry. But to your point, why wouldn't they take the carry? I mean, they have access. You can't get on the cap table without them. I did the deal anyway, but I was like, I just can't, like, you're right. They're an investment bank in some ways. It's interesting.
Yeah. And then with the token stuff, Andreessen took it much, much further and actually got like a ton of their staff actually registered. So they are registered representatives.
Wow.
Because these things probably are securities. They wanted that air cover for the fact that these guys are actually repping securities with all these crypto products.
Sure. Very interesting. Okay. We talked about Swan. We kind of jumped ahead, but I would like to hear from the founder himself, 10 words or less. Give me your high concept. How do you describe when you're walking around, shaking hands, talking on the phone with somebody? What's Swan Bitcoin?
Yeah. I mean, Swan is just the best place to buy Bitcoin, hands down. It's really what it is. We have the best service, best education. It's just like the easiest way to get onboarded and buy Bitcoin for yourself, for your company, for all kinds of like various complicated trust and IRA structures. So.
And then you kind of said this as you were telling me about the story, and I want to interrupt you, but I have this very simple acronym for my investment thesis I told you about, which is differentiation, scalability, defensibility. So go through those very quickly. How at the time of founding it was it differentiated? Mm-hmm. And then there's a little twist to that because you found out later some other things. So talk about that.
Yeah. So I really thought that we could establish ourselves as a trusted voice on Bitcoin, and that would lead to a massive referral engine of people knowing that they could trust us not to steer their friends, family, colleagues, social network astray, right? Because you can't trust Coinbase. Buying and holding Bitcoin is like the number 14 thing you can do as you go down on their homepage to the different things that they are trying to get you to do. They want you to learn about, shitcoin number 84, and compensate you in shitcoins for that or whatever. Like they're just really trying to wreck you. And so if you're the trusted recommendation of Bitcoiners, you should start with that concentric circle and then like build an army of people that feel like they're part of Swan and feel, like they want to recommend what has served them very well.
So the differentiation was solely focusing on Bitcoin and educating on Bitcoin. And by way of doing that, that's the scale plan as well.
Exactly. Yeah. Because if you're going to earn the trust, you've got to put out the content. And if you're putting out the content, then you have organic reach over time. And, our email list reach is like over 350,000.
Wow.
We have millions of Twitter followers across us and our, advisors and
It's
people who can
incredible.
tweet for us, stuff like that. So,
And then once you do that, how has it become defensible in the long term? Tell me the defensibility of the product over time in the business.
yeah, so I think about it in a couple ways. So one, with the great brand and the great service, and the fees being such a small percentage of the total purchase, like it's not that big a deal if you get great service and the fees are. I mean, even if they were double at 2%, which is like where most of Cash App's purchases are, Coinbase app, like if it's a good experience and they like it, they're not like that incentivized to move away. You can dangle lower fees than what we have, like 0.99%, and basically sell unprofitably, because it costs money to onboard users and you lose some to fraud and all this other stuff. But
One of my questions actually on here, and I was going to get to it in a few minutes, is the 0% trade commissions as they have at these large brokerages. We've talked about this privately. So,
yeah,
a few months ago, Coinbase and the S1 filings want to read on to you. It says since inception through December 31st, 2020, they generated, it says we generated over $3.4 billion in total revenue, largely from transaction fees that we earn from volume-based trades on our platform by retail users and institutions. And for the year ended December 31st, 2020, transaction revenue represented 96% of our net revenue. So my question, because you're running a large brokerage, right? So my question for you and Kraken and Coinbase and others like your companies is eventually Fidelity and Schwab and all of them are going to allow people to buy, sell, and hold Bitcoin, right? If those aren't already doing them, some of them are, like Robinhood and stuff. If they go to 0% commissions, how does that impact your business in the future? And will you just introduce other product lines to substitute the loss of revenue if you have to compete?
it's very doubtful that they'll allow you to hold Bitcoin.
Okay.
They'll probably give you an IOU.
Okay.
So I think with us having, we make it extremely easy to withdraw to self-custody or to multi-sig. It's free withdrawals, no charge there, and tons of education teaching people how to do it. We have a company goal of 0 sats under custody, which is completely counter to the traditional financial AUM model. And I think we're the only Bitcoin seller that basically has that goal. The other ones are all kind of trying to
We're trying to make money on custody fees. Yeah.
Well, the custody fees, but like just kind of that relationship and kind of having the lock in and trying to cross sell them other stuff.
Sure.
But yeah, I mean, you see a lot of nickel and diming. Like you may have like a headline of, this low fee sale or whatever, but then there's like this monthly fee and then there's this withdrawal fee and then you're paying network fees and another monthly fee for premium support, which just means having support, which of course is free at Swan. So there's all these other ways that people will kind of nickel and dime you if they dangle the loss leader of the Bitcoin sales. At the end of the day, again, I think for the next decade, so like let's just call it now through 2030, I think that 99 bips is sustainable. And if you have great service and great education and people trust you, I think they have no problem, letting you exist as a business and giving you that.
Let me swing all the way back to Bitcoin for 1 second. We can go back into Swan because I had a question here that I didn't get to. A lot of our friends in Bitcoin, American Hodl being one of them, Preston Pish, others, they're 100%. Every asset they own is in Bitcoin. I'm not there. I don't do that. But I'm a Bitcoin max. And when it comes to a cryptocurrency, I would never buy anything else. We were just talking about this before in a Telegram chat. I got it pulled in today and I'm like, I'm all Bitcoin. What are you guys talking about? What's your allocation? Obviously you're 100% Bitcoin as it relates to any crypto. Do you have 100% of Bitcoin in everything? Do you own a house? Do you have stocks? Do you have any other assets or are you all in on Bitcoin?
I don't actually talk about this stuff. I can give a little bit of color though, which is, my wife is from a culture where a little bit of downside protection is appreciated, and a happy wife leads to happy life. So obviously I'm way overweight, like dramatically so, versus any normie. And, I've got IRAs still in GBTC waiting for that freaking premium to come back.
Oh my God. It's not
or at least the discount to go away or whatever.
Yeah.
And, I've got, I don't think I have any old 401ks that aren't 100% Bitcoin IRAs at this point. But yeah, I mean, I guess the other way that I'm kind of diversified is I just have, I have stake in so many of these startups from over the years, not only my own, but, I've got stake in like 50 startups and I've had like 14 or 15 exits, but a lot of them are still, probably half the rest are still alive from the last 8 years. So there's a lot of paper wealth there. And, every once in a while you'll see me tweet that I smashed some Bitcoin, and people are like, well, where'd you get the money? Aren't you on a startup salary? And I'm like, bro, I did own some other things. Like sometimes that stuff hits. So yeah, I mean, 2021, like my view into what's going on in public markets has been basically through my own lens, which is just watching. I had more exits in 2021 than my entire life previously. Like that just tells you how freaking frothy it is.
That's what happens about 8-10 years after you've made investments. They start to come to fruition.
That, but also it's really frothy. A lot of it was very opportunistic just because the markets were just so hot this year, like so overheated coming out of, the worst of COVID. It was just like absolutely bananas. Everybody was acquiring and everybody was exiting. So,
All right, I want to ask you. You mentioned something to me before we started. Mac Jones, pretty dope. The Patriots quarterback used Swan. Why don't you tell the story about Mac Jones? I don't want to steal the thunder. Tell us about that. That's amazing.
Yeah, it is pretty dope. So yeah, Mac Jones, the quarterback of the New England Patriots, rookie quarterback, University of Alabama grad. Okay, cool things about this guy. He sounds like a Bitcoiner to me. I'm looking forward. Hopefully through this, we get to actually talk at some point. So Mac, hit me up. Corey at swanbitcoin.com if you see this. Jay was a quarterback. You guys should hang out too.
I was a linebacker. He wouldn't like me.
Oh, you were a linebacker. Well, he won't sack you anyway. So he was like a 4.0 GPA econ major at Alabama and supposedly has a photographic memory. So, that's pretty cool. But yeah, he's been getting into Bitcoin a lot. He's been following it for a while. He's been reading up, and he was looking for a way to, every holiday, a lot of the quarterbacks in the NFL will give a gift to their entire offensive line. So it'll be like every O lineman gets a Rolex, or I think Russell Wilson was famous for giving $12,000 of Amazon stock to each of his O linemen a few years ago, stuff like that. So Mac decided that he wanted to give Bitcoin to each member of his offensive line.
So cool.
And he also wanted to do it in kind of like a nice, like unifying, like, hey, we're all homies here. So he decided to take one Bitcoin and split it into 1/13 each. And he gets one, and each of the other ones gets 1/13 of a Bitcoin. And I think he hit up Dave Bailey, who's a Alabama grad over at Magazine, and he and Mike Germano, the publisher over there, suggested that they use Swan for it. And I think what's cool about it is, we started Swan Private Client Sales back in January. So it's been, this whole year, it's been an operation. It's a big team now. It's, Stefan Livera, Terrence Yang, Stephen Lubka, Ryan Flynn, and Alex Stanzik, who you see on Bitcoin Breakfast Club on Spaces every day. So that squad is pretty awesome. We got a new one joining. So what's awesome is like we could send these guys like a nice gift box with a dope metal black card that has their name and their uniform number on it. And on the back, it's like, so cool. This is your Bitcoin guy. And it actually has like one of our, private client sales reps and their phone number. And that's how they're claiming the gift, is like calling them, getting walked through handheld exactly how to set up the account, and getting the Bitcoin from Mac right there in their account.
And you guys are walking them through the cold storage process as well, so they can learn how to do all that?
Yeah. I mean, everything that's purchased on Swan is initially custodied in a trust account with Prime Trust. And then, we basically get to work with the education and teach them about self-custody. And that all comes in the onboarding flow and in the first conversations that they have, so they can take self-custody if they choose to.
I want to ask you about Clubhouse, right? So I met you on Clubhouse.
Hold on. I just have to say, I mean, I always wanted to like write for SI, or when I was a kid, I wanted to be like in Sports Illustrated because they'd like write about me or something. My name still has not appeared in the magazine, but my company's name was on the website this morning. So that was pretty dope that Sports Illustrated covered it.
That's cool.
Yeah.
All right. So I want to talk about Clubhouse for a second. So I met you on Clubhouse earlier this year. I think it was January or so. Became friends. Listen to you, but you really haven't been on a lot. You're running a company. And I didn't realize for the first few months that Cafe Bitcoin was something that you actually created, that club, right? So why don't you kind of tell us how, why, and who for the, on the Clubhouse strategy, and why Cafe Bitcoin? Why not just call it Swan Bitcoin? Like, why did you call it Cafe Bitcoin?
Yeah. So the origin story there is, I think I was vaguely aware of Clubhouse, because I was seeing news stories sometimes about, some racial flare up or people sharing something out of pocket that a VC said in supposedly private room. So I was kind of like aware that it was there, and like I probably would have joined if somebody gave me an invite, but I wasn't like chasing it or anything. Yeah. And then I guess they kind of opened the rolls and let a bunch of people in through, 5 invites for every member in around Christmas. And a Bitcoiner was basically horrified by all the rooms that had Bitcoin in the title and were really actually shilling shit coins in it. And so he hit me up kind of frantically on Christmas or the day after or something last year, and said, we need more Bitcoiners on here. Like we gotta do this. We gotta stop this misinformation campaign. And it was it was kind of frantic, right? Because it was the new all-time high was 10 days before on the 16th of December. Everybody was talking, and the crypto people on Clubhouse, it being started by, Silicon Valley folks and funded by Andreessen Horowitz. Like it was just a absolute shitcoin fest, right? Tons of misinformation and lies about Bitcoin. And so he was like, just tapped me off the bench and said, can you help? So I had these 5 invites, and, I was like, it was troubling when I went in and I saw it, and it was really bad. And so instead of just like using my 5 invites and calling it done, I decided to coordinate basically like an invite tree and get every Bitcoiner on Clubhouse as fast as possible.
These are mostly Bitcoin Twitter folks that came over with you, right?
And Bitcoin Telegram people, like just, and all the founders and the authors and the podcasters and basically anybody and everybody that we could grab and put on there.
And I will say it was a magical time from January to April, May, I think, as it was moving up. Andreas Antonopoulos and Max Kaiser and Jimmy Song and like all these influential people, Michael Saylor, everybody was coming on at some point, came through the Swan Bitcoin rooms. So it was pretty interesting. It hasn't really continued that way, I think, because it gets old to say the same things over and over again. But it was really interesting in the beginning.
No, it really was, and I think it was definitely partially driven by the run up in the price. I think drives a lot more activity there. So when you see like when the price pumped this fall, all the Clubhouse rooms were back over 1,000, every day and stuff like that. So it's a lot of it is just driven by what people are interested in at the time. But yeah, again, a bunch of companies were involved. It was deliberately it was just me who started it, but a bunch of people were admins for it. And, I spend a lot of time thinking about branding and the right names for things. And people had all kinds of names for this. It was like,
give me some of the stuff that didn't make the cut. What's on the cutting floor? What are some names?
I mean, Bitcoin Cafe isn't right because that makes you think of like an actual physical location. Anything about Rabbit Hole is just too insidery. Like anything that was, like Daily Bitcoin is like, sounds too much like news. So I always think about like, it takes me a long time to name things. Yeah. And I usually require, 3 or 4.
I'm usually bad at that, and I change it a couple years later.
There you go. Yeah. I usually think about it for a long time. In Cafe Bitcoin, I wanted it to have the international feel, the drop-in vibe, the fact that you could be there all day if you wanted to, the fact that you could talk to people if you wanted to, or you could sit quietly or just listen, that kind of thing, and just chill. And I love the whole, I like cafe anything. I love cafe society, and like that whole Paris 1920s vibe is really cool to me. So yeah, it meant something to me, and I thought it would travel well and that it would work for what we did. It's a huge Facebook group too. There's a Cafe Bitcoin Facebook group, which, I don't spend any time on, but Quittem and some of the other guys and gals will just manage that and admin that. And that's pretty active.
And then you do spaces too now, right? So you're also doing spaces now, because you've brought me into a couple of those. Yeah.
Yeah. Just spaces. Yeah. But again, it was like,
what do you think between spaces and Clubhouse now? Like they're clearly different, right? Different vibes, right? Would you say?
Yeah, they are different. Clubhouse, it's easier to just kind of hang out, and because more people can be on stage, and it's more accepted to not be paying attention necessarily,
right?
Or to not, because nobody kind of summons you and asks you things. I think spaces, because of the limited number of people you can have on stage and the bar being a little bit higher for delivering quality product, maybe. I think that's probably a little bit of the difference. So I feel like it's harder for me to jump on spaces without committing a certain amount of time and saying like, hey, I'm definitely going to be here.
Yeah.
Whereas Clubhouse, like, I don't mind being on stage and, putting my phone down, and, nobody's going to be mad at me
just listening
when I come back from like, changing my daughter's clothes or something like that. And then coming back, like nobody's going to be yelling at me or feeling like I'm stealing the thunder or stealing a stage spot, I guess. I think a lot of the dynamic just comes down to the limited spots on stage for spaces. But I think they do it very on purpose, because that constraint forces
signal
the
versus
quality.
Noise. Yeah.
Kind of. Yeah. Yeah. I like emojis on spaces is cool. It's a nice way to participate. They need a simple thumbs up, because I don't always want to I feel fist bump is kind of weird and culture appropriation ish.
You could do it on Facebook, and they float up like they used to do on what was the Twitter product that they had? Yeah, it's kind of like just floating up.
Periscope had that.
Periscope, yeah, same idea. With the off to the side, you kind of just you could tell when you're talking because on Spaces you'd have to scroll through the audience to see it happening on their avatars, which you're not going to
So
do.
you don't see it. Nobody's going to see that.
Smart
Yeah.
how Facebook did that. Yeah.
That is, yeah. So there's lots of little product tweaks and things that can make them both better, but they're both good products. And, you know, no two products are exactly the same,
Mhm.
really. Like they all, you know, PMs and engineers end up making a ton of little decisions over time, as you know, where you end up with differentiation. And there's no way there's one winner for audio social networking. It's silly. There will be more.
I thought in like April that Clubhouse was going to be the thing, you know, and I thought the same thing about Snapchat until Facebook, Instagram copied it, and you realize
Yeah.
quickly, well, it's a feature, right? Like you know, they can make it into an overall platform, which they're trying to do, but they came out so fast and gangbusters, and Clubhouse is like, wow, this thing's gonna be a runaway train, and it slowed down.
It did, but you know, certain little tweaks can change it and put it on another upward trajectory, and sometimes it can take years. I mean, what did Snapchat stock went up like 9x in the last year or something like that? After all this, are you kidding me?
Yeah, I went in pre-IPO on that. We sold it after because as soon as they copied it, the TechCrunch article came out today. I called up all these like secondary brokers, get me out of this thing. What the fuck, you know? I was like, get me out now. That was stupid. It's gone up like tremendously since that time, and it was like, I don't know, you know.
You know, and they're innovating and they've got fans and they figured out other markets and all this other stuff.
Mm-hmm.
And you know, I think that you know, there's more than enough differentiation in Clubhouse, and a team focused on just that and not a bunch of other stuff is generally going to out innovate a company that just has a project team working for RSUs or something like that.
Yeah.
Usually. So I think that they'll probably be just fine. I would have been thrilled to invest at $1 billion valuation. I'd probably be happy. You know, I never sell Bitcoin for this stuff, but like, I'd be happy to take some like a grant in that company at 10 million versus like an equivalent grant in Twitter. Let's just say that.
Yeah. I mean, the way I look at it is, I've talked about this with you, I think, and Hodl and some other people, because Hodl's like, nothing's going to outperform Bitcoin. I go, that's not true. Early stage technology companies are starting at like your company when it started a few years ago, right? It's very small.
Yeah, it's a lot of small numbers. That's just how it is.
Exactly. You're going to have a high, I mean, you have to succeed, right? So if you're good at picking those, and you look like you've been in your career, because you have a good portfolio as well, you're probably going to outperform Bitcoin if you're good at that. I wouldn't suggest people trying to do this because you have to have access. And if you don't have the access, you're going to start making bets on things that you get access to, and things you can't get access to, you can't get. And you end up having a shitty, you know, you have shitty returns over time.
Yeah. I mean, it would have been basically impossible to outperform Bitcoin in the first decade. But, you know, from here, law of large numbers, I mean.
That's totally true. But you wouldn't have got in the first year or two, right?
Yeah, exactly. But yeah, I mean, from, you know, Bitcoin, if you got in at 1,000 and it's 50,000 today, like
crazy.
It's not uncommon to have, you know, 100Xs in startup land, but you know, you're going to have some zeros too.
Yeah. I mean, the best one I ever had was like 1,000+ X. And then after the dilution, because you get the dilution once you find on the exit, there's like options and accruing dividends and all kinds of stuff that ends up happening. Warrants from Silicon Valley Bank, and it's like ends up being like a 400X. That's amazing, right? I mean, so I'll take it, you know. But you have a bunch that go to zero as well. So when you average it all out, Bitcoin probably still beats it, to Hodl's point.
Oh, for sure. I think it's again, and that's all super risky and requires a lot of expertise. And you know, if you already understand Bitcoin, there's no more expertise required. And so, like, it's the best risk reward asset that's ever been widely available to the whole population. Like it's just the best investment that's ever existed.
I want to flip over to inflation. I want to talk about inflation just briefly. I know you said your wife is from Turkey, right? So you kind of have some ties to there and to that country, and understanding inflation and how things can go awry. And like we're seeing it's not hyperinflation, but we're seeing some sustained inflation right now. What do you think about what's going on with inflation right now and where we're going?
If you print money, there will be inflation. It's just a matter of where it shows up. It's how it works. You know, and it's a question of like, will it show up in the CPI in the US or not? Mm-hmm. It may show up overseas. It may show up in asset prices in the US. It's also showing up in the price of goods in the US, which should tell you, because they'd really rather it not. So they're doing everything they can to not make it. If they can hide it, they would, and they can't hide it. So it should tell you what's really going on. But yeah, in Turkey, you know, the first time that I went over there, it was that summer of 2010 after meeting my wife in 2009. And I think the lira was 1.8 to the dollar. Last week, it got up to 18 lira per dollar. And, all like it doubled in the last, 33 days or something like that. They've just essentially mortgaged their future to guarantee returns for lira investors, basically saying like, we'll make you whole by giving you some other stuff on top of it if if the lira devalues over the rate of inflation or something like that. So it plummeted. So now it's like 10 or 11 versus the dollar, and it did that just violently. And even that is like scary. Like if it can go down that much, can it go back up by as much? Like what is going on here? So it's just like having this volatile currency and all that just weird stuff that does in the economy at the micro level, which I have, some insight to just, talking to friends that I've made and that were my wife's friends over the years, and they're, our social circle, like you're seeing what's happening. So yeah, it's extremely disruptive. It is, it weakens people's faith in the system that they're living under and that they're part of. It's dangerous for politicians, and when politicians get cornered, they often do wild things. And it kind of made me think like, what if the Venezuelan dictator really did have good intentions, but then he like mortgaged the future, and his currency went to crap, and he knew it may have been, you could actually just describe like the best of intentions to the guy, right? And you could say like, maybe he really did want the best for his country, but to do that, he had to pay off all these different people, and cut all these side deals to get them on board with his agenda. And then when the currency goes to crap and you can't pay for anything anymore, and you realize, oh my God, if I lose power, I actually did all this stuff that I meant with the best of intentions at the time, because I had this shining path for my country and my people. But all that stuff is actually technically kind of illegal, and I've implicated myself and a bunch of other people. And so actually, shoot, if I want to stay out of jail or not be killed, I actually have to keep power. Oh no, now I'm a dictator. Shit. Right. But that's basically, the road to hell is paved with good intentions. And, there's a lot of that going on with Erdogan, like he's done a lot of, he's done some good things for Turkey, and his politics are, not really mine generally, but, he obviously railroaded the country into a more or less like leaving him in power forever. It's been 18 years now, and it was supposed to be like 6. Wow. And, he mortgaged the future, and he sold off a ton of their assets. And now he's recognized the very last thing is that Turkey is actually not particularly levered up. So their debt to GDP ratio is only like 39%. So they actually, like, the country doesn't owe much money the way the US does or Japan does.
Yeah.
And so he's basically promised that he'll borrow in, dollars, euro, yuan, like whatever he had, rubles, whatever, to make these foreign investors whole, to make up for what they may lose with further lira devaluations. And that's bringing flows back into the country. So he's just going to essentially mortgage the future and play the US's playbook. It's funny. We're so far out ahead of what they're playing.
You actually had I was listening to the Dennis podcast with you and Dennis on last week, and it said, your quote was, "You only have to look at food for referring to inflation." And I think you kind of said that in a different way. 100%. I mean, they can't even hide the food, right, at this point. So, they're trying to. They keep changing the basket over the years. Yeah. If you look at the 1981 basket versus now, it's like 15% versus 6%. So the 6%'s got to be significantly higher, right? As we said, it's 15%. Mm-hmm. But they're lying to us, and they can't even hide that at 6%, right? That's what's crazy. Right. But that's what the people need to do. Just look at your food, right? That's when this is totally off the rails. Like at that point.
Oh yeah, absolutely. Yeah, it's super clear.
Another thing I had BJ on recently, and he was talking. We were walking through the Bullish Case for Bitcoin book and his thesis on it. Yeah, there it is. That's right.
I have signed copy number 256.
Awesome, man. One thing I like about VJ is that he's very pragmatic, but he also lists what he believes are potential risks to Bitcoin. And the only risk that I think is a real credible potential risk in terms of like that I could see possibly playing out, low probability, but the only thing is the Federal Reserve, right? I think it's the only risk to Bitcoin. It's also the reason why Bitcoin was born, right? I mean, exactly why he created it was the whole money printer, and trying to get back to sound money with Bitcoin. But because of the Fed, they're the reason why it's going parabolic, right? Because they keep doing what they're doing, and they keep doubling and tripling and quadrupling down on their policy. So I'm just curious, do you
I
think that the
firmly
Fed?
disagree, by the way.
Okay, yeah, I just want to ask you. So
Yeah.
let's go through this, right? Because I
Yeah.
think that my thesis is that Bitcoin is growing the way it is because of people like Michael Saylor that are bringing the most money into it, right? And so that pushes number go up, right? The NGU
Yep.
technology we can talk about. I don't think he would be doing that if he had an alternative. As Tina would say, there is an alternative. That is true. But if there were an alternative, would Michael Saylor have found Bitcoin? Or he'd been dismissive from Eric's pushes and nudges over the years and be like, "Well, I could just buy these,"
Yeah. I mean, there's nothing outside the system.
Yeah,
Bitcoin is the only thing outside the system.
it's the only outside
right?
money, right? Yeah.
It's the only thing outside the system. Literally everything else is inside the system. Every altcoin, gold, the dollar, all fiat currencies, they're all inside the system. So the only thing that you can buy that's outside the system is Bitcoin. So it's the hardest asset ever, right? So, and it's not controlled by anybody. But yeah, I mean, all this stuff, these short-term narratives.
But what he wasn't, I don't think, but hold on, let me take a step back because I've heard Michael on many hours of interviews and stuff talk about this, and I could have misunderstood him. My understanding was he was in Bitcoin because of the inflation issue that he was seeing that was about to happen, right? And so he couldn't find anything that would, in terms of the risk reward profile, that made any sense, right? So he bought Bitcoin as a hedge against the inflation that was coming, that was going to ensue. If there was an alternative, maybe he would have bought that, something that was more comfortable, that had more established history, but he couldn't. There was nothing else, right?
Yeah, because there is nothing else, because the foundational layer that denominates all of these assets is the dollar, right? And we're on a U.S. Treasury standard, basically, globally. And we can print as many more of those as we want to whenever we want. And you can't trust anybody to hold to any sort of like firm monetary policy for any particular length of time. Like, it's just not credible. But yeah, I mean, just in general, it's useful to trot these things out that help people understand what it is. But at the end of the day, like, we as humans now have the best money that we've ever had. We have the first real money. Everything else is basically an approximation of money. It's like a shadow of what money can be. And we have the perfect form now, right? In Platonic sense, we have the perfect form of money. And when it came out, was convenient for marketing because it came out in the middle of the global financial crisis, but it wouldn't have mattered.
What do you mean when it came? What is the it came out?
When Bitcoin came out, like, it was announced in 2008 and the network launched in 2009. And we look at it as like, and we always talk about it being a response to the GFC or whatever. And it's not.
Wasn't it a response to? It wasn't.
No, it would have been released as soon as it was done, whenever it was figured out.
Right, but he started this in 2008 when we were going through a recession. They were doing bailouts. No,
he might have started in 2002. I don't know when he started it.
Okay.
I don't know when he started working on it, but you would have released eCash whenever you actually cracked the code and like figured out how to do it.
So was it? So the mother of, they say necessity is the mother of invention. You don't think it was born out of necessity, and that was the mother to the invention of it?
No, it was an innovation that people had been working on for 36 years or longer.
What were they trying to solve for when they were coming up with the idea then?
The Byzantine generals problem.
Okay. So it was just purely from a technical perspective. They weren't thinking about.
Yeah. Once you solve that and you unleash that on the world, it's a technology growth story.
Yeah.
So it's weird because it's a technology growth story that happens to be money.
This is like what Bram was saying to me, actually. It was really interesting because his perspective was very similar to what you're saying. He comes from a very tech, but he's stuck on the technology part of it, not the monetary value of it. He's stuck in the tech part of it, which I think that's where it was probably born out of. And we realize now it's solving some other greater purpose. And I think he kind of just gets stuck in the tech, And I have all respect in the world for what he's done. I'm not taking anything away from Bram. I mean, he's a brilliant individual, but I just was like, I don't understand why he can't see the monetary value of this at this point.
Lots of people miss it. They're just like, they're talking to who they talk to and they have their frame of reference and it leads them astray. There's lots of people that have liked Bitcoin that don't understand it.
I'm still trying to figure it out. That's why I do the interview.
We all are. Nobody can understand it completely because it changes and it's alive, right? And it changes based on what we do with it. It interacts with the social layer.
So wait, hold on. So let's go back to the tapering and then their announcement that they're going to try to raise rates next year. Let's go there. Do you think they're going to do that? Do you think they're actually going to get to the point where they can actually raise some rates?
I have no idea, man. You know me. you know me, I'm like, don't try to predict the future. I don't like false narratives. I don't like false prophets. So people saying they know exactly what's going to happen. We kind of know what happened last time they tried to raise rates and the economy kind of choked and wouldn't have it. It was late 2018, I think, was the last like big hiccup.
Yeah.
You know, and then we shall see.
I mean, there's an old saying, right? Don't fight the Fed, right? And it seems like the I'm not saying not to be in Bitcoin, by the way. It's very clear to people listening to this. You should still buy Bitcoin. This is a short-term issue that I'm talking about. This is a time preference issue, right? High time preference. So no matter what happens, eventually the pristine asset will prevail, right? Just like last year, it crashes and then it comes back with a vengeance.
Yeah, I mean, I think that we're in the flat part of an S technology adoption curve with Bitcoin, and this is both number of people and the value flowing into the protocol. They're both on the flat part of the curve. We haven't even started to go up the steep part of the S curve with people who actually understand Bitcoin and have like a lot of their net worth in Bitcoin, which is what most of us will in the future. And we haven't started to go up that, their money moving in. So, that is a totally different cycle than these short-term fluctuations in policy of one country or whatever. All kinds of things can happen that have more or less effect than what we happen to be talking about right now. That could be step change in adoption. That could be, a country choosing to, like a big country choosing to make Bitcoin legal tender, or a much bigger company than MicroStrategy jumping in and putting Bitcoin on their balance sheet in a major way, tens of billions of dollars or something like that. There's so many different things that can come out of left field that can completely change the game. Some kind of technological innovation, some major company deciding to get, hardcore into Bitcoin as a payments technology, and just like, my general thesis of like Bitcoin being a widely used medium of exchange, by 2028 or something like that. What if that gets pulled forward like 4 or 5 years because somebody actually figures out, how to do with minimal tax implications, like micro lending against a Bitcoin balance that lets you spend fiat, right there with a credit card. And so you can actually do this like get on zero thing that Level wants to see, or something like that. MasterCard has something in the works with that. Visa has something in the works with that. I think Fold is launching something. Like, I'm getting all these calls and talking about this stuff. Like, it could be faster. We don't know.
I know you don't like to predict things, but my question for you is, by 2030, what do you think the price of Bitcoin will be?
I wrote an article that included, no, I didn't actually write an article about that, but no, I mean, I think I just, I'll stick to what I've been saying, which is like, for my own personal family planning and like thinking about, my company's finances and stuff like that. I think it's really conservative to say like, 90% plus chance of the Bitcoin price hitting $1 million a coin by the end of the decade.
Yeah.
Like that's like a 20x. And we did 20x. We did 20x in 3 years.
Yeah, I mean, this leads me to the stock to flow thing. So you've obviously been vocal about saying the math doesn't add up. Jimmy Song, who's obviously a core developer, pretty respected in the space, is like, well, let's just say it play out for the end of the year. Listen, bro, we're at the end of the year. I don't think it happened. Walk me through how you believe it'll be there to that point in the future, or somewhere around that point to the future. And it just seems obvious to me there's gonna be more buyers and more demand over time, and the supply is limited. So it is sort of a stock to flowish kind of thing, but it's not so predictive, essentially.
Yeah, I mean, it's actually just about the stock, not the flow.
Okay.
It's that there can only ever be 21 million Bitcoins, and there's a global race for this.
And there's an
This is
increasing
why, like,
amount of demand, right?
yeah, this is why like Saylor, somebody who thinks about this stuff deeply, just laughs it out of the room. And this is why you have like ineffective pitches to hedge fund managers or money managers or anybody that actually understands math and stats. If you bring stock to flow to the table, like stock to flow models, you just get laughed out of the room. I have like hundreds of anecdotes of this in my DMs and emails from the last couple of years. But at the end of the day, it was just like bad statistics and bad modeling. It was just set up wrong, and it was just invalid from the jump. So you didn't have to wait, 2 years to see it not play out. It was never a valid model. Anyway, so that's that. As far as like there's just so much money out there. And, when I usually talk about price, I'm always talking about in present day dollars. So like 2021 dollars. So if I'm saying like $1 million of purchasing power, I'm talking about 2021 purchasing power. So, maybe double that. And, if the dollar deflates by another 50% over the next decade or something like that, I'd be thinking about like $2 million in nominal, but $1 million in 2021 purchasing power. So I think that's probably a helpful way to think about where I think we're going. But, it's just going to require a lot more of the mind virus spreading, and it'll spread through companies and individuals. And, it is a monetary protocol. So while it is very important, in the sense of like, let's get everybody that we can on the ark, the number of people is very important because, the more people, the more rich people, the more companies, the more people in Treasury Department making those decisions. But at the end of the day, it is the assets, it's the purchasing power and the value flowing into the protocol that makes number go up. And I'll credit, Rob Breedlove always talks about this and just points out like, hey, it really is about the value flowing into the protocol, not just the number of Bitcoiners. And I think that's one of the reasons that he focuses so much on wealthy people, because he's just trying to orange pill the rich people.
Yeah, I'm just Googled it right now. It's like, I just want to read this to them. So while the richest 10% of adults in the world own 85% of the global household wealth, the bottom half collectively barely own 1%. So it's really not about, for number go up, it's not really about the number of people going in. It's about the wealthy people going in the institutions. It's over time, which will happen, over time.
Yeah. And then that will actually be better and fairer for everybody, because you'll actually, then even the bottom, 50% that don't get a lot of that asset because they can't afford it today to get much, they'll still get paid in hard money, and the systems that they're part of and the governments that they're working under will be on balance significantly less tyrannical and less able to operate with essentially like stolen funds from the populace, because they'll all be held to a Bitcoin standard.
Oh, first of all, do you believe in hyper Bitcoinization at some point? When do you think something like that could happen? Do you think it'll happen in your lifetime? And I'm just curious, because I always try to like kind of game theory this out a little bit. Like, how do you see that transition happening?
So this, I do have kind of an article out there. It was kind of the new updated mission statement, or at least path forward for Swan and what I'm working on. I put it in CoinDesk. But it was basically, the conceit was, what will the world look like in 2035 and what will it look like in 2050? So kind of like 15 years out, 30 years out. And, that visual that we've all seen of the, progression of an asset from, store of value, which we're early in that, to medium of exchange, widely used medium of exchange, into unit of account, I think is a good way to think about it. Mm-hmm. I've been thinking a lot about, you got to hold Bitcoin for like the better part of a decade to have it become like 90% plus of your net worth, both because it appreciates, but also because the more time you're around Bitcoin, the more you put into the Bitcoin protocol.
Right.
So like, I'm still a new Bitcoiner. Like, I haven't even like graduated into Bitcoinerdom, essentially, because I'm like, 4.5 years in, and, I feel like I'm not at that 8-year, 9-year mark yet. Yeah. And the only people that, other than the tinkerers and people that have like very specific use cases, you're not going to be spending much Bitcoin until you have nothing else to spend. And so that requires you to get to that point where it's like 90% plus of what you could spend has to be Bitcoin. And I think that, spending of Bitcoin, where it becomes a widely used medium of exchange, needs a much bigger cohort to get through that 8 to 10 year time frame. I think the 2017 cohort was probably big enough where they'll drive a lot more product innovation and a lot more spending of Bitcoin. And then you'll get merchant adoption, because if somebody wants to pay in Bitcoin, they'll gladly accept it or whatever. So my guess is, probably 2025 to 2027 was my theory heading into focusing on a store of value company, or at least store of value products first and medium of exchange later. But I also could be wrong, and it might actually be the 2020, 2021 cohort that needs to mature to like 2028, 2030 or something like that before they're really spending it. And then for this idea of having products and services available, priced in sats most places around the world for most things that you might want to buy, not exclusively, but also on the price tag or in the system. That to me feels like a 2035-ish kind of thing.
Right. It's going to take a while to retrain the way people think about that, right?
Yeah. I mean, again, it just comes down to demand, consumer demand.
Yeah. It's like language,
I actually think it comes down to like that the number of people that actually have most of their wealth in Bitcoin,
Right.
and thus want to spend it because they have nothing else to spend.
But the vast majority of people have no wealth, right? They just live paycheck to paycheck. So I had a conversation with somebody about this recently, and my friend was saying to me, he couldn't understand how that's. First of all, this is one of the things he said to me, Corey. He's like, "We're going to run out of Bitcoin." This is a common thing people say, and I'm like, "No,
Yeah.
you got to read this guy Jeff Booth's book, The Price of Tomorrow. Everything is actually deflating." And so, if anybody thinks that you'd run out of Bitcoin if you've gotten this far in the interview, an hour in, you're not a real Bitcoiner if you haven't, right? So, but that which means you probably aren't here. But if you did, you're probably wondering the whole time, scratching your head, these guys are crazy. There's only 21 million Bitcoins, which is 2.1 quadrillion Satoshis. You're going to run out. And it's like, explain to everybody why that's not the case, right? Because that's
It's okay because there's 2.1 quintillion millisats. There's enough for everybody.
right.
But no, I mean, it's just, some things that we buy, we're aware of deflation at work in prices because some things we buy keep getting cheaper.
Mhm.
And that can be either, a TV could be cheaper, or you can get like much more TV for the same amount of money. Like the TV you can get for $1,000 today is just epic compared to what you could get for $1,000 10 years ago. That's, the deflationary influence of technology at work. Technology by definition is a massive deflationary force. So it's really the only things that, naturally should go up in price really are things maybe connected to, human effort. And that's only if you're in an inflationary currency environment.
Mhm.
So the prices of
everything that you look around that's
yeah.
man-made in your room will over time start to deflate if they can't continue to change them.
If technology is involved, exactly. If technology is involved in the manufacture of that, the cost of that good or that service should come down. Some things like in-home.
But even like landscapers and things like that, those prices will drop over time, and they're
Under a Bitcoin standard, they will.
Yes, that's what I mean.
Under a Bitcoin standard, they will. Absolutely. Yeah, because there's only 21 million Bitcoins. And there's going to be a massive global fight all the time through self-organizing market activity to try to get your hands on more sats by adding value through your fruits of your labor and your thinking.
And through AI and machine learning and stuff like that, a lot of jobs will be eliminated over time, which will be totally fine in a Bitcoin standard as well, right?
Listen, it's going to solve a lot of problems. We don't know all the problems that it's going to solve, and it will create some new ones. It'll create some new problems, and there will be entrepreneurial opportunities, and there already are, right? Like it already, you can spot things that are like, oh, this is going to be different. That's an opportunity. I want to be one of the first entrepreneurs to tackle that one. Or I've got my company and I want to put a little, Swan X or Swan Labs team on that little hit squad to try to figure out something to do in that space, that kind of thing. I'm bullish on all the opportunities that will be created.
Before we hop, I'm gonna talk two things. The first I'm gonna say is I had Alex on from the Giving Block, and I'm sure you're familiar, right? I thought that was pretty dope what they were doing. It's kind of cool, allowing people to donate Bitcoin to your favorite charity. Are you guys gonna do something like this? It seems like it's something that Swan would do at some point.
Yeah, I mean, we've been doing it for a long time. I mean, people can give Bitcoin to whatever, and lots of people give Bitcoin to their church and, political campaigns. We also do a lot of donating.
You have givebitcoin.io. I've never checked it out, but I read it in your bio earlier today. I've never heard of it. So what is that, by the way?
Yeah, so that was the initial product. The first thing we launched was a gifting product, and then people were buying it for themselves so much that we split out and started Swan. But yeah, we actually just relaunched gifting inside of Swan for the holidays. So we've had thousands and thousands of gifts, and obviously Mac Jones used that. And I did a ton of holiday gifting. I think I gave over 200 Bitcoin gifts to people.
And his thing over a Giving Block is that he gives it only to nonprofits. You guys can also offer that as well. So
to anybody.
Yeah. So it's not that differentiated, unfortunately, for his product because you're doing the same thing, but he's focusing on it. So that's his only focus. So that in itself makes it maybe a business, I guess, right?
Yeah. I don't know. I've never heard of it. And is it a crypto thing?
He's also doing crypto. I didn't mention that, but yes, he's also doing that too.
I think, Coinbase launched that in 2016 with a lot of fanfare, and it's been out there for 5 years, letting people donate crypto to whatever.
Because you get unrealized gains, and the point is you don't want to sell, pay tax, and that. Yeah, so that's the idea.
Nobody cares about the Coinbase thing, including Coinbase. So we'll see how it goes.
Okay.
I think the Bitcoin thing, because, and you saw this with Charity Water, Scott Harrison, and I introduced him to the MAG folks and got him a conference slot to announce that. But doing a Bitcoin endowment with the, legal promise to hold for at least 5 years with that Bitcoin donation.
Yeah.
I rag on the Winklevi sometimes, but that was pretty dope that they matched the 50 Bitcoin gift and put up 50 of their own for that. And that's one of those rare charities where you can actually see the work that they do, and they track all the finances down to the penny, and they actually do what they say. So I think that resonated with Bitcoiners, and nice that a few people stepped up and helped out there. So I'd like to see more of that. We can facilitate that pretty easily, like extremely easily. So feel free to get in touch if you want. I think before we break, I think it would be useful to talk about, maybe just some of the things that we're doing at Swan and what we have available. So we've gone real hard after the whole retirement market and these setups, and we now have by far the cheapest setup. So I think it's $300 to set up an IRA and no annual fee, whereas nobody else has.
This is a self-directed IRA, correct?
Self-directed IRAs, exactly. Yeah, so it's monumentally inexpensive or something so get in touch. Terrence is heading that up. Terrence Yang, you can find him on Twitter or just hit me up directly to figure that out. But so that one is really good. We've also been international for a year now, and probably 30 or 40% of our business comes from outside the US now. So that's all handled through Swan Private as well. So you can get in touch with us, any country around the world. We've got Turkish buyers and Hong Kong buyers and Taiwanese and Egyptian and all through Latin America and stuff like that. So that's pretty cool. And then I guess the other thing I would just tease, which is just kind of near and dear to my heart, is Bitcoiner Ventures has become a really cool vehicle. We're closing in on 500 LPs now in the AngelList Syndicate. You can sign up at bitcoinerventures.com. Just did our 5th deal. And it's getting to be easier and easier to cut a check of 300 or 400K, just collecting checks over a couple of days. We did a Galoy a few months ago. That took 4 hours. This most recent one we did was Revault. I think that was 2 or 3 days. So, it's nice to be able to add that. I'm also on the advisory board of a committed capital fund, the Bitcoin Venture Fund, which is, Trammell Ventures and Chris Calicott and that crew. But, 1031 obviously is a big investor in Swan. Love that they've gotten Odell involved there, and that's a committed capital fund. Elise is kicking ass with Stillmark. There's more and more funding for these Bitcoin startups. So, get in touch if you're building in the space. I'm not investing much right now, just kind of participating in our AngelList syndicates, but I can definitely help and love to give some support to other people building in Bitcoin.
And this is really important because this is why the shitcoin market has exploded, because they're putting money into it. So the people that would otherwise maybe create a Bitcoin only company, if they can't get the funding, they're going to go where the money's at. So it's great for the Bitcoiners kind of coming together. And I think there needs to be real institutional money. There needs to be $100 million plus funds as well doing this kind of thing. That's where I think you're going to see real innovation happening, and you pump the valuations up like they're all doing in the shitcoin space, right? Just push them up a little bit so they can get, because honestly, valuation at that state, as you know, it's more of an art than a science in the earlier days, right? Yeah. So higher valuation, more money in.
And I mean this, if you would consider starting a shitcoin company instead of a Bitcoin company because you couldn't get the funding, don't get in touch with me. I don't want to hear from you. So I only want to hear from Bitcoiners that are actually building things. I'll help you.
If you're a capitalist, how dare you? At the end of the day, that we do know that people will do that, though.
I think that they're not going to do well. I think they're going to hire the wrong people. They're going to have team mutinies. They're going to have lead engineers quit when they don't add Ethereum. If you're leading a Bitcoin company and you aren't a Bitcoiner, you're fucked.
But the point is, Corey, if you want to struggle and you're going to get 100,000, 200,000 versus someone giving you a $3 million check, it's enticing to young kids who are 22, 20, 25 years old, right? So they're like, shit, I'm going to go in that path, and because I'm going to get to scale faster, get to an exit faster, and create more wealth and get better impact on society. That's the thing, right? So I'm just saying,
I don't think they'll have better impact on society.
I think it's
or more wealth for society.
You're getting ideological here for a second. Let's not.
I don't think so. I'm not, and it's okay. This will be good. No. What I'm saying is, look, you were talking specifically about Bitcoiners versus shitcoiners, and that individual founder may create more value for themselves. Correct. They may be able to do some rent extraction, and let's hope all those people hit me up. Once you get your exit, hit me up. We'll put it in Bitcoin for you. That's totally fine.
But I'm just saying that show me the incentives, I show you the outcome, right? The old saying.
And what I'm saying is this guy or this gal is not going to create value for society.
I don't disagree with that. I'm just saying that in the Bitcoin space, we want to see more larger funds so that we can get the
Yeah.
talented people to not get confused or distracted and just stay focused on what they know is true. That's all.
It is gravy though,
Yeah.
because what Bitcoin does have is the rational behavior of absolutely massive family offices and massive corporations and massive governments that actually spend more time on this stuff than crypto VCs that have the poor incentive of short time to liquidity.
Yeah.
So if you actually have to buy and hold this asset for a long time, your pension funds, your governments, your public companies, they are doing the heavy lifting for Bitcoin. It's Square being down for Bitcoin, or it's called Block now, but Jack Dorsey's company, like them being down for Bitcoin is worth like 1,000 shitcoin startups. MicroStrategy being super into Bitcoin is worth 1,000 shitcoin startups. So yes, it does suck that there's like way more crypto fund VC than Bitcoin focused VC, but Bitcoin startups also can tap the world of angels, and there are probably 4 or 5 million people globally that would cut an angel check into a Bitcoin startup because they're Bitcoiners, and they can tap normal VCs that want nothing to do with crypto bullshit, but do understand that Bitcoin is a platform you can build on and that actually has revenue generating business models. So there is an imbalance if you only look at it like, crypto focused VC versus Bitcoin focused VC, but we have public companies, governments, family offices, and the world of angels and normie VCs that will fund Bitcoin startups. So it's really not that much of a worry.
Yeah. If you just look at the AUM at Andreessen Horowitz and those and the likes of them, that's what you're competing with. So more money coming in is what I'm saying. We need larger funds
Yeah.
to compete, because at the end of the day, they're taking and distracting the market and the growth of Bitcoin when that second layer of Bitcoin can be built, the Bitcoin rails, if there's just more capital coming into it. So I'm just saying I applaud with what you're doing, and I think it's great. I just would love to see institutional money coming, organize itself in a typical way like we've seen others do, because we can see what they did with Ethereum and what they've done on the top of the ecosystem there, and all of the values created for investors to the world. To your point, not creating a lot of value to the world. It's a bunch of JPEGs being sold left and right. It's like, what are we doing here?
Yeah.
But that could have been on top of Bitcoin actually, and then you would have the underlying asset of Bitcoin going up even faster had they had an incentive to do that, but they can't create a shitcoin. So because it's on top of Bitcoin, right? But anyway, the last thing I wanted to bring up, which I heard you say, and you said you weren't the first one to say it, I thought it was really interesting, was the big long, right? Michael Saylor, they got to write this story, right? The big long versus Michael Burry, the big short. Basically buying Bitcoin, you're going long Bitcoin, but you're shorting fiat. I heard you just mention this. I don't know if you wanted to touch on it because I thought it was an interesting kind of statement.
No, I think it's great. Wasn't that Adam McKay, the director that did The Big Short?
Yeah,
I think it was.
Yeah.
Yeah. So he just dropped the Don't Look Up DiCaprio Jennifer Lawrence movie on Friday.
Yeah, I actually thought it was a pretty good movie.
Yeah, I'm not done with it yet. I watched about half of it last night, but it was hilarious so far.
It really reminds me of where we're at in the world today, man. It's like the world could be ending and we're arguing over it. It's like, what is happening?
Yeah, it was pretty funny. But yeah, I think that movie's got to happen. I'd love to get Swan Studios involved in that at some point. Yeah, it'd be pretty cool. We're working on our third project right now. But yeah, if we can start, we've got some people involved, like the guys that did This Machine Greens that are doing a new either feature length documentary or it'll be like a 5 or 6 part series. Like that one's going to be super high quality. I think it'll end up on Netflix or Amazon. They have the kind of connections. Like one of the guys actually ran distribution in Europe for either Warner's or Fox for a decade or something. Like they can actually get big shit done. So yeah. I think you'll see more and more of it. I think Lauren Siekman's got some good connections and she's working on a project, hopefully for Netflix or something like that. So I think you'll see more and more really high quality Bitcoin, like sort of cultural impact having content come out in the next couple of years. I'm bullish, but yeah, I'd love to see that movie. And who would play Saylor? Wouldn't Saylor just insist on playing Saylor? Like who could play him?
Exactly.
Who would play like the big long? Who's that guy?
Who could play him? I'm thinking about that now. It's like, what movie star has his kind of character MO? Like, I don't know.
I mean, actually, one of the guys that had a small role in The Big Short, who's the Emmy-winning co-star of Succession. I forget his name. The guy that plays Roman. Ken. Yeah, Ken. The guy that plays Ken. He'd be pretty good. I'm blanking on his name. But yeah, he could play Saylor. talks tech, and he's super intense.
I'm looking through it right now. See if I can
Yeah.
remember who it was. Oh, Jeremy Strong. Is that it?
Yeah, Jeremy Strong. He is intense as F, and I think could dial up his Sailor if he had to.
That's a good one. I got to throw that one out on Twitter. Who should play Michael Saylor in the Big Long?
You should totally throw it out there. Absolutely. Hit me if you put it out there. I'll throw
definitely.
some
We hang up.
suggestions in there. Yeah,
Cool.
but he'd be good. He'd be really good. That's funny.
Awesome. Corey Clipston, thanks for coming on.
Jay Gould, thank you for having me on. Awesome.
Awesome.
As always, good to hang out, man.
Cool, man.